Welcome to the stream, everyone. In today's video, or kind of live stream, just going to do it for about 30 minutes or so, go through trades we're currently in, trades we're maybe going to open, as well as just go through some live market analysis and really just do what I kind of do as the market opens. So as you can see, actually now we're on the Pepsi chart. Reason for this is that is currently our only open position. You can see we're currently holding only one debit spread, one contract. Bearish on Pepsi. We did open it, I think, on Friday, and we can see it currently is up £10 on the $10 on the day and $24 on the year, or in essence, this position's open. So first time I've traded Pepsi this year. But either way, firstly, why did we get short? Why were we bearish on Pepsi? And the reason for this is if we go over to a 4-hour daily, 4-hour 180-day chart and a yearly daily chart, we can see. Let me just quickly open that up. We can see that we did come into our second deviation on the 4-hour, and we've come into our first deviation on the daily. So to me, this is now very overbought. We would expect the stock to pull back, and if we do go on to a longer term time frame, we can see Pepsi was at its all-time high. And I am someone, I know a lot of people, when they go to all-time highs, they try and play the breakout of it. But to me, if a stock's at an all-time high, it's usually a relatively good area to be shorting, because stocks don't stay at their all-time highs for that long, really. You tend to see them pull back. So if I'm trying to play the pullback, I can play it with the debit spread that we've currently got. So even if it takes, say, 60 days, 3 months, or whatever it is, to start pulling back, it doesn't really matter, because you can see with this debit spread position, we have 150 days to expiry. And so if it starts pulling back in, say, 6 months, that's totally fine. We'll still, or say for more of like 4 months, that's totally fine. We'll still be able to make money on the trade. Now let me just quickly open up the stream so I can just see everything. But that is the only position we're in currently. So we will now just go through, I guess, some stock analysis. No alerts have currently gone off yet today. So we're just going to have to find, we'll kind of just go through the watch list and see what there is. So again, yeah, we'll probably keep streaming to about 10 a.m. market time, which should be a good enough time. So on the, at least my watch list, which does have a lot of large cap stocks in, no stocks are really that much up today. We're seeing like Exxon and really like Nordstrom and stuff up about 2%. We also actually got the cruise stocks pushing up. But really on the cruise stocks, they are something actually I do want to start trading a bit more. But I really want to see them push down that bit further, kind of break this support that was created a few weeks back, because they all have that same kind of line. That's Norwegian. If we go over to Carnival Cruise Line, this same kind of level of support, we're seeing they're starting to pull back. Today may just be a pullback of the kind of pullback. So if we continue down, definitely something I'd be looking to trade. If anything stands out on this watch list, Twitter down 3%, one of the largest pullbacks in the big cap side of things. Currently came into its statistical mean on the 4 hours, so if you were looking to kind of get long around this level, around 480, 490 is a relatively strong level. But really we would be waiting for it to pull back and kind of continue pulling back to at least really the 36 is the earliest time we get in. But on the daily statistical mean, still at $33.90, so really 31.50 would be the ideal level to be getting in on something like Twitter. Now let's quickly refresh the gapping scanner so we can see what small cap stocks are moving. Again, they're not something I tend to trade all that much anymore, small caps, and it is a video I may actually make, just because they were just a lot more stressful to trade. Trading something like the large caps, trading them with options, we have defined risk. You don't get stuck in halts like you do in the small cap side of things, so it was just a kind of an easy transition to go and trade stocks like that. So currently the leading gapper on the day is WINT. We can see some resistances at 77-78 cents, and then if we continue past that level, we have our next level at $1. Now we can see that it did kind of push over this level in pre-market, come back, retest it, kind of failed, come back. So as of right now, this stock does actually look a bit more weak because we tried to kind of hold this level twice. It couldn't do it. Came back, it has kind of retested and started to sell off. So on this stock, I don't really know if we're going to continue up high today, but if we do, then we do have that $1 resistance, big psychological resistance, and then obviously is our second deviation on the 4 hour. So we would expect resistance coming into that level. Now, if we continue past here, we do have further resistance at $1.35, $1.43, $1.84, and then final levels at $1.93 and a final one at $2.50. Now, what I think is probably more likely is that we start pulling back on this stock, and then what are going to be support levels. So the first or closest support level is around 60 cents, and then really we don't have any more that close. So it would be looking at the gap fill at around 46 cents. Now, what other stocks could we be paying attention to? I don't think any alerts have gone off. Market watch alerts. Triggered. So we have Pepsi, which we've already gone over. Let's quickly just see how that's continuing. It's kind of just staying around where it is. It's kind of pulling back to a VWAP. So hopefully this level fails and we do continue to go down, because again, we are holding this stock in a put. As you can see, actually, I don't even know if it says it on here. Oh yeah, put. So yeah, it's something we are currently trading more bearish. So hopefully we can continue down. Currently up 25%. Sorry, $25 on this position. I think it was around $200 to get into the trade. So we're up about 20% on this trade so far, which is quite nice to see. So what other stocks? Actually, I think we had two futures go off. Yep, so we had housing oil go up. Let's go and quickly check this out and see where. I think it's housing. Yeah, oh sorry, heating oil. See where heating oil is currently moving. We tend to only look at the longer term time frames when looking at this. So I did have an alert here that was more just to see if we can start breaking this resistance here around $3.80. So this will kind of be interesting to watch. I will put an alert a bit above here to see if we can kind of break and confirm this level. If so, then we could see heating oil continue up. I will also set another alert down at this first deviation, because if we start pulling back, this will most likely be the level we come back to. So getting notified here, I can then set up new alerts to the downside and upside so we can keep track of where it's going a bit more. Then we have 6BU, which I think is a euro, because these are currencies usually if they got the 6 before it. Or is that the pound? Okay, that's the pound future. So the pound is still pulling back, which we can actually pull up the forex pair on this, but everything really against the dollar right now is just so weak. We're even seeing, I think yesterday it hit for the first time. We saw the euro and the dollar go to a dollar to a euro, which is something we haven't seen in a long time. So yeah, if we go pound to the USD, which obviously means as it's pound first, if the chart's falling, the pound's getting weaker against the dollar, and we are continuing down on this. And so this is definitely helpful as well if you're someone like me who has both US residency, has UK residency. You can keep money between the two, or maybe you have your trading accounts in two different currencies. As of right now, most of my accounts, or actually I think all of my accounts, are currently held in dollars. And the reason for this is obviously that the US dollar as of right now is just being a lot stronger than something like the pound, even compared to the euro. You can see today, I mean, they're up about 0.25%, but overall the European side of things are just very weak. We can even check out the Australian dollar to the USD. Australian dollar is holding up a bit better, but overall still quite weak. But really, everything is going to be weak against the dollar in this kind of market, and the reason for that is obviously the US dollar is the currency reserve. So if if people are scared to be holding money, and inflation is high, they tend to push to the dollar because it's more of a safe haven currency. How's the euro doing to the pound? And we can see actually then recently that, I mean, it is quite stagnant, and this is another reason why I do tend to focus on the US side of things, because whether you're looking at the European exchange, you're looking at the FTSE, whatever it is, they tend to look basically exactly like this chart. They just don't move. They're very stagnant. And so if we pull up actually the FTSE, actually I never know how you pull it up on UKX, there we go. So this is the FTSE over the past, well here 180 days, here the year. And you can see again, it's really not moved in the past year. Well actually I can't see when I'm like that, but we are currently, I mean, we're up a tiny bit I think on the year. Currently up around 5% on the year, which I guess is holding up better when you look at the US compared, because if we go to the US one, or the S&P 500 in this case, obviously we are down from its high, so we're actually down in the past year. But you also got to look at if we go on to I guess more onto I want to get like a 3-year chart. Yeah, 3-year chart. We can see obviously the S&P 500 is still pushing up. It is, I mean, much higher than where it was 3 years ago. I keep doing this, and it's one annoying thing about Think or Swim is it cuts off the side that I actually want to see. But there we can go. We can see we're still up over 40% from 3 years ago. So, I mean, still beating that 10% return that you look to make in the stock market if you're just investing and leaving your money there. Whereas if we go back to the the FTSE, you'll see we're still on that 3-year chart. But how is this stock looking? And it looks like we're up, but I don't imagine anywhere near as much. I've done that same problem again. But if we go here, we can see we're up 3%. So I mean, the really everywhere apart from the US, the markets are just very weak, and they just don't tend to be good to invest or even trade. And then we can go and check out the DAX and see how that is. I imagine it's quite similar. But that is one of the things, even though I currently live back in England right now, I don't focus on European markets just because there's nowhere near as much money to be made. I mean, you can see the DAX is up 10% in the past year. I mean, a quarter of what the US is doing. So that's just one of the things I do kind of want to cover while we're looking through stuff. Now, I guess we can go through. I mean, no alerts have gone off, so nothing's really near deviation buy levels or sell levels. So as of today, there isn't really anything, unless the stocks keep moving in a direction. There isn't really anything to get into today. So we'll just go over some stock analysis, see where certain things are moving. And currently we're looking at XOP, which I can't remember. I think this is an oil ETF. Yeah, oil ETF. So this is, I mean, going to move the same as really the oil futures and even something like XOM. But we are kind of pushing back to its high. Actually, it's moving a bit of a bit different to the crude oil futures. We can see the crude oil futures just seems to move a bit more fluidly. But really, if you're looking to trade oil, we're going to be looking off the future side of things. But it's something actually I do need to set my alerts out. Some of the alerts did cancel yesterday because I think some of the futures moved on to a new expiry date. But if we're pushing against or kind of to this 115, actually I'll put it a bit higher, because oil is one of these things. Whenever it comes to the 120 level, I mean, you can go really onto any chart and see this. Whenever we come into this 120, 110 areas, we tend to sell off. If we go out to a longer term chart, go to 120, you can see we broke past this in 08, I think this was. Came up, we broke to 47, but very quickly sold off. I mean, we were above that level for no more than really 3 months. We did a quite strong pullback the first time we hit into this level, and again we kept kind of dipping below it. So this is one of these levels on oil that I always like to be paying attention to, because if we push to this level, we expect to sell off. So if we want to trade it through options, we can by using something like XOM, or even really the ETF, but they don't tend to work as well if we're trying to do debit spreads. Or we can just buy, literally just get long a put. If it expects it to fall, we can be looking at that. I mean, there may even be some triple leveraged ETFs on oil, and that they could be quite decent. Or you can just sometimes short with shares. I mean, always if we are shorting shares, tend to use a hedge of some sort by buying a call just in case it kept going or keeps going for too long, where we don't want to be in the trade for all that time. Check out EWZ, which is the Brazilian ETF. If if we check out this iShares, iShares Brazilian ETF, we can see that actually on a monthly chart, since this is IPO'd, which I think was, I don't even know, I can't really see, I think it was like 2000, around 2000. We're currently sitting on its first deviation support. That is really why we kind of bounced in this level. I mean, if we go on to a more recent time frame, I guess, go on to actually a 4 hour, go back to our normal charts. That's why whenever we're coming into this level, we're really using this as support. We keep bouncing off this level, and that's just going on to the even longer term frame. So usually when we're doing our analysis videos, we're focusing on the 4 hour and the daily, and giving you these levels. But if you really want solid levels, and they're not really as efficient on stocks, I wouldn't say, but more on going over to the indices, anything like this where it's a Brazilian market, if you're going on to the S&P 500, anything like that, you can push out this time frame even longer and tend to get stronger levels. But that's why we can see it does keep buying into, keeps pushing up into these levels. And this is why actually something I will set an alert on, because if it comes down to here, just something I can get long some shares in. Now, I actually want to see that same thing. If we go over to the S&P 500 futures, we go over to a max time frame, we can see where did we bounce most recently. Again, if we put in the supports here, we can always be using these longer term time frames, because the longer time you go out in these time frames, the stronger they're going to be. The only problems you tend to have with going on to the super long ones, and that's why we tend to focus on the 4 hour and the daily, because then you get a lot of consistent trades. But if you're focusing on the monthly max time frame, yes, they're going to be stronger levels, but how often are you going to hit them? Maybe once, twice a year, if that. And that's why we tend to focus when we do our analysis videos on the 4 hour and the daily. And we can see again, if we come into this level, where is this support? And again, it's straight on that monthly first deviation, which is something we're seeing again and again. This is starting to lag a bit, so I'm going to have to plug my laptop charger in. Sometimes it makes the fan get a bit louder, that's why when I'm recording I tend to have it unplugged. But hopefully it isn't too bad if the fans do start to speed up, but it should make everything a bit more smoother. And then we could go check out the jets, which is airlines and just anything really plane related. And this again, it's all everything right now, at least on the ETF side of things, aren't really in tradable levels. Nothing's really going off. We can go over to the agriculture ETF. This is actually pushing down. Again, we want it to push down a bit further, down to around 1925 before we start getting long, because then that would be our second deviation on both the 4 hour and the daily. Quite a strong level. This was one we actually were looking at. It was posted in Discord a few months back on when we expect to see a breakout on it, and that was just because we did have quite heavy resistance really across this line here, which we were kind of focusing on. Can it break out? If so, we do probably expect it to continue, especially in a time where inflation was increasing, and that's what we were kind of focusing on here. We kind of broke out, retested, and then started to break out a bit, but this was from a longer time ago. I think if we went on to a 3-year chart, it was a bit, I don't remember what one we were actually looking at. It was in the Discord though anyway, if you're in the Discord. If not as well, it's in the description if you want to join it. And then we can check out the BITO, which is the ETF for Bitcoin. But again, with something like Bitcoin, I don't tend to trade it all that often, unless it comes into like really key levels, which is something we did. I think we uploaded an analysis on Bitcoin on Friday, but it is something we're waiting for it to continue down that bit more. We're currently sitting around 21,500. If it's something I'm looking to buy, I'm not looking to buy it really. If we clear these just to make new levels, but they're really going to be the same as where they were before. Really on Bitcoin, I want to see it push down to around 10,000 before buying it. Obviously we have the recent low around 18,000, and we also have our half deviations around 15,500. So these are going to be the key support levels if we continue down, but really the key one I'm focusing on and will buy if we get down to it is 10,000. If we come down to the 15,000, might be something I trade with small size, but not going to be too much of a focus. Now Ethereum kind of moves the same as Bitcoin, as we know, could be a really good one to trade soon, as CME have released, which is Chicago Mercantile Exchange. They have said they're going to release options for Ethereum, and when that happens, then Ethereum, if there's volume in those contracts, which I imagine there will be, we could definitely get some really good trades on Ethereum, because again, it kind of trades the same as Bitcoin. So if we're seeing something like Ethereum coming down to its first, second, or even third deviations, they're going to be low risk buys on the currency or the crypto, and if we can get them with options, we can get defined risk and have a lot of upside, because on something like Ethereum, yes, it can easily move, say 100%. If we're buying down $300 or $900, whatever it is, it can move 100, 200%, and if that's in options, depends how volatile those options are going to be. But I mean, if you can get some high delta options, I imagine you could be making crazy returns as long as you're judging that direction correctly. We will go over a few more stocks, I guess, just to kind of see what's happening. And actually, I guess we can just go over the key ones that everyone usually wants to be knowing about. So firstly, AMC, what's happening with AMC? Pulling back another 2% today. Like I said, yesterday's analysis, really be watching for this low, well, which we are now. This is going to be the support level. The key focus will be, can we break below this level, come and retest it, and really can just kind of focus on the $10 level, but break below it, come back, retest it, and if we start selling off, expect a push further. And where will that target be? It's going to be around $8 slash $7.90. So that would require, you know, another 20% sell off, but it's something we would expect to see if we break below that $10 level. And so yeah, seeing that could provide some good trading opportunities, and something maybe we even want to get long bias coming into around that $8 in anticipation that it gets a momentum pump. And again, I'm not someone who trades these small cap stocks all that often, but if they're coming into these kind of levels, we know most likely Wall Street Bets or something along these lines are going to pump this stock. And in getting something like at $8, we could even hedge it with some puts if we wanted to. But I mean, it probably would start moving if we came into that level. We can check out how 8 is doing, which IPO'd yesterday. Today it's up 14%. Don't know how the volume's actually doing on this stock. Actually, volume is pretty decent. I mean, if we go to the open, it's using it's doing about 500,000 to about 1 million per minute, which is quite crazy to see actually. So this stock, I mean, not going to look to trade off 8 because really there's no fundamentals to go from it, and the technicals, there isn't any really long enough unless you're trading on a 1 day 1 minute chart, and that's something you do. But really the key focus, if you're looking at 8, just be looking at AMC. When AMC comes into a low risk buy area, you imagine 8 will probably be at that same sort of buy zone. Anything else we want to check over before we end the stream, because I'll probably end it in the next few minutes. Check out ExxonMobil real quick. Currently actually pushing into statistical mean. So if you can see that on the 4 hour and the daily, actually the levels are very close together. We can quickly just update this level straight to statistical mean, but around $98 to around 98, was that 98.35. Within this range, we are hitting statistical mean on ExxonMobil. So coming into this level, we would expect a pullback at least, but if we start breaking over this level, we could expect a break to 108. But again, remember, something like ExxonMobil, it's really just going to move on how the overall crude oil futures move. So do expect a pullback on the individual stock in this level. But really, if we're going to push to 108, their earnings are really going to be based on how the overall crude oil futures do. So just be focusing on the crude oil if you're trying to look at Exxon. But with Exxon anyway, if it kind of breaks above that $100 level, it's the same as when crude oil futures are around $120. You know it's more likely they're not going to pull back. And that's why it's something actually I tend to focus on when we're coming into this $100 level, which we are kind of now. And something we will set an alert out for. Because again, with something like this, we can just do the debit spreads, even if it takes a month, 2 months, 3 months to play out. It's not going to matter all that much. We can still profit from that. And we can place, actually the alerts are fine. So we've got we'll get alerted if it hits $100 and if it can break its $105 high, both key levels that we'd be looking to trade. How is Robinhood stock doing? Not as volatile as it was just a few weeks back, so something we're focusing on really if it can break back down to around $7. Robinhood, I personally still use their app. I think it is quite good if you're kind of on the move or you just want to check a stock price, then use it for that. If you're just looking to execute just some shares, a longer term investment portfolio, or just buy a put, buy call, I mean even do debit spreads, Robinhood is quite good at that. It makes it very simple, especially for newer people. And even though their active users are declining, really you're seeing that on any broker that just has more beginner focused platforms, just because a lot of people got in it during the COVID hype, and then as life's going back to normal, if they lost money or they just didn't enjoy it all that much, a lot of them are leaving. DKNG, another one that is kind of have been pumping recently. It went up around 100% in the last kind of 3 or 4 months. Again, not something I'm focusing on unless we push quite far down back to around the $11 level, would take us to statistical mean and would provide some trading opportunities. TPG, again, it hasn't been around all that long, but this is a stock, especially once it's been IPO'd for at least a year. Something I will be looking to trade. I mean, it's one of the top PE firms out there. Earnings are usually quite solid. And I mean, yeah, it's really on par with anything like Apollo Management. And yeah, I mean, definitely a solid stock. It's kind of near back to its IPO price. Something I did trade actually around the $25 range long. And again, if it can come back down to its IPO lows, definitely something I'm interested in. I quite like the stock. Financials is usually one of my main focuses because I understand them a lot more than say something like airlines or oil companies, which I just don't focus on as much. Anything else we want to focus on? We'll quickly pull up the Facebook we'll check out Netflix. It is nowhere near as volatile as the stock used to be. I mean, it is quite not a stagnant stock, but it's just a weird kind of moving stock as of late, because see, part of FANG used to be something that would just usually outperform the market, but as of lately, I mean, we went from $700 and we're currently down 67% since there, nearly doubling the decrease in market has made in that time. So it's one of those things. I mean, if we break below that 165, could be a potential long unless earnings are coming up, and if we can break kind of above that 307 level, that is our first deviation on the daily. If we come back, retest that as support, something I would be looking to trade to 350 in anticipation of the gap fill getting completed. And we also do have our first deviation around 148, well, kind of 250 on the 4 hour. So again, if we can break over this level, come back for support, we could expect to push to 307, and then again, if we can come back to support, we could expect a final push to around 350. Don't think there's anything else really moving on that much. Again, no alerts have gone off, so nothing's really that close to deviation levels. I think the last stock I'm going to check over is Rite Aid, one I have been focusing on quite a bit lately. Once it did come into around the $10-11 level, we were at its second deviation on the 4 hour, so we were anticipating a pullback, which we currently see playing out now. As we can see, today it is up 1%, so obviously nothing crazy compared to how it's been selling off, but we do expect to pull back to around 830, maybe 875, as that would be our first deviation. We would expect to pull back to this level before continuing down, just to kind of test that resistance slash kind of support, and then we could expect to push down to around 575 to around $5 relatively quickly. And what's up? Welcome to the stream. Hope you're all good. And yeah, but I mean, to be honest, actually kind of getting into the stream a bit late. Probably going to look to end it quite soon because I need to record the videos ready to get up on the other focusing stocks. But if there's any stocks you want to analyse quickly before we go, just let me know and I can cover them real quickly now. One stock actually I want to check out actually is Dave & Buster's. Haven't been, again, since we did the analysis video on it, I haven't seen any alerts go off. But something focusing on, if it can come down to this 31.50, definitely something we're trying to get long. And again, if it can push up to $46, something we will look to short, because as we can kind of see here, Dave & Buster's is quite range bound, at least in the past year, so it is, as of right now, quite a predictable stock. One last check then, I don't think there's going to be any recommendations on stocks to analyse. We will have obviously videos out today, probably about 5 to 10 analysis videos on some gappers and just more trending stocks. But on Pepsi, again, this is currently the only position we're in. We can see actually it's currently around this VWAP level, being able to break it. Now it's starting to push up a bit. We would expect a push to around 178.50, as that would fill the gap created today. Hopefully though, once we fill that gap, as it's something I'm sure, we can continue down. But again, this is a longer term play, so if it doesn't work out in the next few days or weeks, it's not the end of the world. You can see we do have 150 days to expiry, up $8 on there. I mean, nothing crazy, but we are only in with one share. Something we will probably look to add some size in if we push higher. So something like Pepsi, if it's at its all-time highs, I don't like going in with large size right away, just because yes, maybe 7 times out of 10 this will be the top and we can catch that reversal. But if it does continuing up, which is always possible, and we are only at the second deviation on the 4 hour, we're still at the first deviation on the daily. So until we're kind of at that second deviation on the daily, which is around 188, then I would feel more comfortable increasing size. So really within the range, if we do continue up on Pepsi, we will look to add in a new debit spread and probably maybe even just getting long some puts coming into the 186 to 188, because then we would be quite high. I mean, we would be up around 10% since its high, or sorry, 5% over its all-time high or recent high. So pushing to that kind of level, we would be very overbought. We would expect a pullback, so that would definitely be something I'd be paying attention to. One thing we do just want to note for the last thing on Pepsi is, if you're looking at the stock, it is actually starting to divert. If we're looking very closely at this zone here, we try and make this a tiny bit more clear, but you can see very slight but definitely noticeable decline or divergence. I mean, once you draw the line, it's a bit more noticeable, but compared to price, obviously the price has increased quite a lot while momentum is starting to dip. So that is also a good indication when you're looking to short the stock, like I personally am right now, that the stock is moving on less momentum to these highs. And the reason you usually see this when stocks are moving to their all-time highs or even 52-week highs is investors and even traders, they're more cautious to kind of buy at this level, because why, if you weren't buying the stock at 150, why are you now going to be buying it at 180? Doesn't usually make too sense, and really tends to be more people buying at those areas. If it's an ETF that kind of has to buy the stock, I mean, if they have to buy it, which if they're buying the stock, they kind of have to buy it at whatever price it currently is, then they'll have to buy it. But really, you don't tend to see too many funds that don't have to buy stocks buying it at all-time highs, and that will usually be more the retail side of things buying at all-time highs, and that's usually why I tend to short it. I prefer to be on the side of the firms instead of the retail. But anyway, we will end the stream here. Again, later today we will have about 5 to 10 analysis videos uploaded, so definitely check those out. Again, if you want any recommendations, you can leave it in the comments when the stream's uploaded, or just go onto any analysis videos. I have comments on, so I'll be able to see that you've left a comment and analyse anything you want.